How are we doing out there? Are we okay? All right, let's get started. I'm going to kick it off with a little bit of S&P 500 chart. This has gone parabolic. Folks, whenever I see something like this, I get nervous. Well, first of all, don't short it. I'm not giving any advice at all. I wouldn't short this, but it's time to start ringing the register on some of this and taking profits. It's great, but it's really all based on hope and expectation, which is a wonderful thing. But if you go back to 2009 and look at this, we've basically, come a long way. There's some very interesting individual stuff going on here. Look at this one. Talk about resistance, right? Look at this. It's just a constant reversals at this area over and over again. That's for Tesla Motors. Once again, hit hard. In the area above 250 and getting rocked again. Overvalued company, most likely. When we talk about the euro, right, Ford Motor Company sells a lot of cars in Europe. So they're not really participating here. This stock has been dead money. General Motors has done somewhat better, right? But Ford has been very, very quiet. Here's one that's doing very well lately is McDonald's. They do a lot of business in Europe. So, part of the problem for U.S. companies is doing business in Europe because you make euros and you earn euros, and when you bring those euros home, they're worth less. And when we look at this, we've been saying for a while that if this gets under 105, it might be very interesting. And we're getting really close as we speak. We're at right now we're at 105.01, and that's the lowest point of the day. So we're basically at 105.00. We did take a little peek underneath 105 about a week ago, very briefly. And so are we going to make a run underneath here? This is more about dollar strength than euro weakness. As I mentioned earlier, in the first session today, and if you missed it, please check the archives. But, Europe finally got some good inflation numbers and is seeing 2% CPI, 2% consumer inflation. And that's good. Although the core is only 0.9, as you can see right here. But, overall inflation, 2% has been the goal. That's been the target for quite a while. We did note earlier that Canada had a pretty strong number on GDP and a very strong jobless claims number out of the U.S. By the way, 30 minutes from now, ISM New York Index coming up, International Supply Management. It's the Purchasing Managers Index figure, and that's coming up in about a half hour from now. And really, that's about it. I don't really worry about Japan economic figures because the Japanese yen doesn't really respond to economic figures the way that other currencies do. Japan often responds to the stock market and things of that nature as opposed to economic statistics. It's just, it's got a mind of its own, right? You could say, some people say the yen goes its own way. It doesn't really correlate to its own economic statistics the way other currencies do. Tomorrow I won't be here with you, but we do have a ton of information tomorrow. And probably the biggest Right. Do we have just taking a quick peek through here tomorrow? We've got a lot of speeches from different Fed members. Oh. We've got a lot of speeches from different Fed members coming up tomorrow. Have a safe trip.
Thank you.
Okay, and we've got retail sales out of Europe, market PMI out of Europe, and of course, tons of other stuff too. GDP out of several different Europe. Lots of market PMI numbers out of Europe. So, and out of China too. So, tons of information moving the market tomorrow. Let's get to some charts. Will this get under 105, and will it be worth a shot if it gets under 105 is the question. I have had my eye on that for a while. It depends how it moves down here. Let's go to I'm going to go to a 5-minute chart. I'm thinking I would prefer it if it shot quickly down below 105, like if it just tags and run. The low here is, I'm showing now the low as 00. It tagged the zeros, and now it's already bouncing up. Let's see what happens, though. Maybe it'll come back down. I wanted to get underneath there. I was thinking of trying to play it to play a rebound, that it would turn and pop back up. S&P futures, by the way. Yet another green candle. Look at that. After a big day yesterday, right? Just can't stop the momentum. Let's take a look. I also want to take a look. Here's dollar yen. Look at this. This thing's on fire, man. And that breaks a huge trend line. We said earlier, if this dotted line breaks, dollar yen becomes a short. But that's why you wait for the break, and there's a great lesson in here. That line never broke. It came right, the price came right to the line just 3 days ago. Comes right to the line, rebounds, bounces up, straight up, breaks the descending line, and never looks back. And now, this doesn't necessarily mean that it's going to go straight into an uptrend. But I would say that the downtrend is in doubt. You could go into a sideways situation now, right? But you can't say downtrend any longer because of that. You could possibly say sideways. So I could throw another line on here like this, and we could look at it like this: that it's trapped between 112 and 116 or 115.50 approximately. But that changes the whole outlook for this, for dollar yen. Dollar yen, we said before, the yen tends to be influenced by stocks, and dollar yen in particular tends to be influenced by stocks. So if stocks are going up, dollar yen tends to go up. But as you know, dollar yen looks nothing like the S&P 500 chart, which is absolutely levitating. Okay? Absolutely levitating. All right. All right. So what would be the play here? I would never short a runaway stock market, but this sure looks like a potential short at the upper end up here. Look at the resistance. And this looks like it's about 115.50. Yeah, that's about 115.50, and we're going to put some lines. Like you can see that the price has been rejected at 115.50 on numerous occasions. Not lines, arrows. So if it gets up to where are we at now? We're at 114.50. If it gets to 115.50, now that's 100 pips away, and you're saying, Ed, it's 100 pips away. What am I going to do? That's 100 pips. Look how far it's come in the last 3 candles, right? That looks like, to me, as if it's moved well over 200 pips in the last 3 candles. So it could certainly move another 100 pips. and you could get a chance to short it up here. How would we do that? I wanted to come up here and tag this line first. I wanted to come up here and touch 115.50, and we set this up as what I call an elevator trade. The way we do this is you measure the distance from the upper end to the lower end. And there has to be enough room for the trade to make sense. In this case, there is. I mean, if there's 30 pips between support and resistance, you can't do the trade. In this case, there's plenty of room. Look at all the support down here. Lots of arrows down here, right? Lots of arrows down here. And so we have a lot of support and a lot of resistance, right? So the question is, how far? How much room are we talking about here? That line, that lower line, is approximately 111.80. My eyesight is failing me here. Hold on one second. 111.70. Nope. Let's get that line out of there. Try that again. More like 111.60. So I've got 111.60 and I've got 115.50. I like this, a lot of room to work with. Let me get rid of that. I don't like this line. Let me put it, I like the solid line better. 1 second. 115.50 is right about here. There we go. That is a lot of space. It is about 390. I'm going to compromise a little bit on this. Meet me in the middle here. Get rid of some of these wicks. And I'm pushing this down a little bit. I'm pushing this one up a little bit. Okay, because we just remember, support and resistance are areas. So it's possible to try, we don't want to be too perfect. It doesn't have to be absolutely perfect. They're general areas. Okay, 115.50 to 111.70. That is 380 pips. Originally, we started out 390. It just tightened it up a little bit. 380. Okay. I'm gonna say 10% of 380 is 38. So, time to get out the calculator. One second here. This is called I like to call this an elevator trade. You'll see why in just a minute. We get that right at 115.50, so there's no confusion. Now, these are support and resistance levels, but they're not entry and exit levels. Very important to understand that. We don't enter and exit on support and resistance. This number is the key. 380 is the distance from support to resistance. 10% of 380 is 38. My entry is 38 below this number. 50 minus 38 is 12. The entry is 115.12. But here's the key. I'm going to make that green. I'm not going to short this at 115.12 as it's coming up. The price has to come up to 115.50 or higher. And then I'll put in a sell at 115.12. That way, one of two things can happen. If it keeps going higher, I don't really care. If it turns and drops, boom. I've got it right there. I want to sell it as it's falling. That's what I mean by an elevator. I want to catch the down elevator. I don't want to get on the elevator that's going up. I want to get on the elevator that's going down. Now I'm going to need a stop. The stop is also based on this number. 10% of 38 is 10. 115.50 plus 38 pips is 115.88. And this becomes my stop. 115.88 is the stop. So the risk is from 115.12 to 115.88. The risk is 38 times 2. Right? Risk equals 72 pips. I'm going to use, now I need targets. One of my targets is going to be way down here, but it's not going to be 111.70. A lot of people would say, well, your target should be down here. It's not going to be exactly down there. It's going to be above 111.70. How far above 111.70? 10% of 380 is 38 pips. Add 38 pips to 111.70, and what do you get? You get 112.08. Now, the distance from the entry, 115.12 minus 112.08, reward is 304. By the way, I also like that target because it's just above a round number. Do you see that? That round number of 112, it's just above it. And because prices often bounce off of round numbers, and I don't want to get caught up in that. But my reward to risk looks pretty good, doesn't it? 304 divided by 72 is 4.2. So my reward to risk ratio is 4.2 to 1. Right? You take 304 divided by 72, and you get reward to risk equals 4.2 to 1. So far, so good. Now, if you, I don't usually use one target. Very often I use at least two. One of the things I like to do is to use a 1-to-1 target and close part of the trade at 1-to-1, and that way I can move the stop to break even. So if I did that, where would my first target be located? Well, the distance from my entry to the stop is 72 pips. I know that because my risk is 72 pips. And risk is always the distance from the entry to the stop. The question is, if I went 72 pips below that entry, I would get, let me try that again, that's 115.12 is the entry, minus 72, it's 114.40. Let's put a line at 114.40. Okay, and this will be target 1. Okay, so this is going to be a 1-to-1. One-to-one target. So this will be target 1. So I could just do this with 2 targets, right? Let's get rid of this. I don't want to confuse people with that. This could simply be close half here and close half at 112.08, target 1 and target 2. Nothing wrong with that. But I could also use a third target. And how would I create that third target? I have found that when using support and resistance trading such as this, sorry about that, that's the opening bell for the New York Stock Exchange. I have found that for the an excellent target to use for support and resistance trading is the halfway point between support and resistance. So look at the black lines. The black lines are not entries, exits, or targets. They're simply support and resistance. 115.50 and 111.70. Those are 380 pips apart. What's halfway between them? Well, what's half of 380? Half of 380 is 190. 111.70 plus 190 equals 113.60. 113.60 is right here. And that's exactly the halfway point between support and resistance. Why do I like that? Because you'll notice that, look, sometimes the price makes it all the way to resistance, and sometimes it doesn't. Sometimes the price makes it all the way to support, and sometimes it doesn't. But you know what? It almost always makes it halfway. It almost always makes it halfway. It almost always makes it halfway. Halfway is a pretty good target to use. So, let's use three targets. Target 1, target 2, and target 3. This is a big, 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 big trade. It's a massive trade. It's an ambitious trade. It's not a trade where you have to worry about an economic indicator or 1 or 2 pips here or there. I like big trades. And I like the fact that it's got 3 targets. It's not going to be resolved quickly, so you don't really have to think about it very much. The one thing you do have to think about, the one thing you cannot forget with this trade is this. You cannot enter it as the price is rising. You have to enter as the price is falling. First, the price must rise to 115.50 or higher, and then you can enter as it's falling. That is the key to the elevator trade. The trade, you can only enter when the price is moving in the direction that you want it to go. Okay, gang, that's going to do it for today. Thanks so much for your time and for listening. I appreciate it very much. Thank you so much for FX Street. And I will talk to you next week. Everybody have a great weekend. Take care.